To keep you updated on the capital and financial markets, here is a recap of what happened.
Indonesia has promised capital market governance reforms after global index provider MSCI flagged concerns about market transparency that have rocked Indonesian stocks, wiping about $80 billion in value off the exchange. MSCI also said the capital market of Indonesia, Southeast Asia's largest economy with gross domestic product of about $1.4 trillion, could be downgraded to frontier status if it did not resolve the issues by May. An abrupt sell-off in Chinese technology shares pushed a key index to the brink of a bear market, as concerns grew about authorities slapping a tax on internet firms. The sudden drop came as investors grew worried that the government may impose a higher value-added tax on internet firms after a tax increase on telecommunication companies. The decline also followed recent volatility on Wall Street as doubts resurfaced about the tech sector's high valuations and reduced expectations of U.S. interest rate cuts. U.S. brokerage firms and custodians may seek distribution fees from managers of exchange-traded funds, J.P. Morgan said, marking a possible crucial shift in the country's $13.5 trillion ETF market. The U.S. market over the past decade has seen the rise of new fintech firms that introduced commission-free trading, disrupting established Wall Street business models. Indian industry and financial markets cheered a long-awaited deal between New Delhi and Washington to cut the highest U.S. tariff rate imposed on any major economy, even as analysts cautioned that key details remained unclear. The rally came after U.S. President Donald Trump indicated that the U.S. and India had reached an agreement reducing Washington's 50% tariffs on Indian imports, some of the highest levied by his administration on any country during his second term. The Securities Commission Malaysia's new 1.5% revenue-based levy on brokers, which took effect on 1 January 2026, is imposed only on gross revenue derived from regulated capital market activities and excludes other business operations and group-level income, according to the Ministry of Finance. The variable annual fee model is not unique to Malaysia, as many jurisdictions impose regulatory fees based on revenue from regulated activities regardless of whether entities record profits or losses, to ensure stable and sustainable funding for regulatory operations, the MOF said. In response to industry concerns, the MOF said the SC has announced a 3-year transition period from 2026 to 2028, during which a 50% reduction will be applied to the variable annual fee. A 20% reduction will also be granted for certain transaction fees, particularly those related to capital market products and fundraising activities, it noted. Read the latest issue of the e-Zine available at FIMM's official website to stay updated about what's going on in the industry.
This has been the FIMM TV Weekly Recap. Be sure to like, be informed, share and subscribe. Stay updated.